Hello everyone, I'm Christina Xavier and today I will be presenting on the topic application of financial and accounting principles in practice. So with a focus on how the theories and knowledge we have explored this theme can be applied to potential career opportunities, and mainly my presentation is particularly aimed for reflecting upon the significant financial accounting principles covered in this course. So these principles are not just theoretical concepts. They are also a tool that can profoundly influence professional practices in various industries. So as we proceed, I will outline the several key financial concepts, including the stock valuation, net present value, NPV, and the capital investment decisions. So these are the main crucial for everyone entering the financial sector and can be important roles ranging from the financial analyst to the strategic investment planners. So the main aim here is not just to revisit our coursework, but to connect these concepts with the real world applications that you may encounter in these careers. So whether you are looking into enter finance, technology, real estate, or any other sector, understanding these concepts will really help you to make an informed decisions that align with the company's financial goals. And I'm looking forward to discussing how these fundamental concepts can be instrumental in shaping our professional journeys. So let's dive into the details and explore these applications further. Um, okay, so in this course, we get into the more three fundamental financial concepts that serve as a backbone of the corporate finance and investment management. So let's begin with the stock valuation. So this concept is crucial for anyone involving in the finance sector, especially when it comes to the investing in stocks or valuing a business. So understanding how to calculate the intrinsic value of the stock using methods like the discounted cash flow or comparing it to the similar stocks in the industry is indispensable. So these techniques is very helpful for investors to decide which stocks are unvaluated or overvalued, guiding the investment decisions. And next, we covered the NPV, net present value, and the investment criteria. So NPV is a core financial metric used to assess the profitability of an investment. So it helps to determine whether the returns from an investment will exceed its cost, considering the time value of money. So this is particularly important in industries where large capital outlays are required and the financial viability of projects must be meticulously assessed. Then lastly, capital investment decisions. So it involves evaluating the benefits and the cost of long-term investment opportunities. So these decisions are not just about the choosing a projects with the highest returns, but also about aligning investments with the strategic goals of the organization and managing the risk effectively. So by mastering all these concepts that we mentioned before, we are equipped to make informed financial decisions in any business environment, whether it's a startup considering its first investment or a multinational planning a major capital expenditure. The principles we have studied provide a framework for evaluating options and making decisions that will maximize the value for the stakeholders. And the next is the stock valuation in real life scenarios. So let's dive into the concept of stock valuation. So it is the fundamentality about the determining what company stock is truly worth based on its current earnings, expected future earnings, and overall market environment. So this calculated intrinsic value is then compared to its current trading price to determine if the stock is undervalued, fairly valued, or overvalued. Several methods are used for stock valuation. First is the DCF, discounted cash flow. So it involves estimating the total value of companies' future cash flows and discounting them back to their present value using a required rate of return. And another common method is relative valuation. It's comparing a company's financial metrics like the price to earnings, the PE, or the price to book, P/B. So ratios to those are similar companies. And the dividend discount model, DDM. On the other hand, values a stock based on the present value of its expected future dividends. So understanding these valuation techniques is very crucial, and it helps investors and financial analysts make a make an important investment decision. So in in summary, stock valuation is not just about picking stocks. It's about the making educated decisions that align with the financial and strategic goals in various industries, whether you are planning to work in the finance, real estate, or any corporation. Understanding how to assess the value of investment critically is an indispensable skill. Let's move on to the next slide. Is the role of NPV investment decisions. So NPV is a very crucial financial metric used across industries to evaluate the profitability and the viability of projects. So it is very essentially measuring the essence of shortfall or the cash flows in the present value terms after covering the project's cost. And let's break down the NPV calculation here. So we start with the forecasting the cash flow the project will generate in the future. So each of this cash flow is then discounted back to its present value using a required rate of return. So which reflects both the time value of the money and risk of the project. So the sum of this discounted cash flow is then compared against the initial investment required to start the project. So if this value is positive, the project is expected to generate more value than its cost, making it potentially good investment. So the application of this NPV is particularly significant in sectors where the large capital outlays are required and the benefits are realized over a long period. For example, so in the manufacturing sector, so companies might use NPV to decide whether to invest in a new production facilities or equipment, considering the hefty upfront cost and subsequent cash flows from increased production capacity. So in this technology sector where companies frequently invest in R&D projects, so NPV helps in assessing which technological innovations or system upgrades are worth the initial expenditure based on their potential to bring future revenues or cost savings. Similarly, in the renewable energy sector, so NPV is indispensable for evaluating the investments in an infrastructure like the wind farms or solar panels. So these projects require significant upfront investments but promise the long-term sustainable cash flows. So here NPV helps in making the decisions that align with both financial feasibility and environmental sustainable goals. So in summary, NPV is not just a theoretical concept, but a practical financial tool that aids the decision makers across the various industries in evaluating the financial metrics of large scale projects. By applying NPV, companies can rationalize their investments, ensuring that they contribute positively to their growth and strategic objectives. Next is the making the capital investment decision. So it is very important for any business looking to expand or sustain its operation over the long term. So these decisions involve significant outlays of capital and are crucial because they determine the strategic direction of the company for years to come. So the criteria for making this decision often start with the financial assessments using the tool that we discussed before, it's NPV and IRR, internal rate of return. So these metrics is very helpful to quantify the financial benefits of proposed investments and ensure they exceed the cost of capital. So, however, beyond just financial returns, it's essential to consider how these investments align with the broader strategic goals of the organization. So this includes the enhancing competitive advantage, entering into the new markets, or innovating the product offerings. So let's consider some hypothetical examples to see how these decisions are applied in practice. First is the in healthcare industry. So a hospital might evaluate the investment in a new wing dedicated to cardiology. So this decision would involve analyzing the expected increase in patient capacity and improvement in medical services. So weighed against the substantial capital expenditure and the operational cost. So here the decision would also be aligned with the long-term strategic goals, such as becoming a region leader in specialized healthcare services. So, in summary, making well-informed capital investment decisions involves a thorough analysis of the financial, strategic, and risk factors. So these decisions are very critical as they have long-lasting impacts on the company's growth, trajectory, and market position. So understanding and applying these principles effectively can lead to successful business expansion and sustainability in any industry. Next is application in decide, work, and beyond. So, as we discussed, the application of financial principles in a professional setting, I would like to highlight my story of interest in the technology and renewable energy sectors. So, these are not only the drive for innovation, but also critical for sustainable advancement of our global economy. So, in the role of financial analyst or an investment planner with these industries, the application of financial analyst and strategic investment planning becomes very essential. So, firstly, in the technology sector, rapid advantages are high pace of innovation require robust financial analysts to ensure that the investments are both profitable and strategically sound. So, here we are using the NPV and IRR calculations. It will determine which new technologies or product developments could potentially offer the best returns on investments. Similarly, in the renewable energy sector, the importance of sustainability adds another layer of the complexity of to the investment decision. So here, the financial analysts are tasked not only with the financial economically viable projects, but also with ensuring these align with the environmental goals. So in both, the ability to merge the qualitative financial analysis with the strategic planning allows for well-rounded decision making. So this not only helps in identifying and investing in the most promising innovations, but also ensure these investments support the sustainable growth and long-term viability. And that's it. As we wrap up today's presentation, let's quickly revisit the essential financial concepts that we discussed: stock valuation, net present value, and capital investment decisions. These aren't just the theoretical ideas, they are the practical tools that help the business make sound decisions about where to invest their sources to maximize the returns while aligning with their strategy goals. And I'm particularly excited about bringing what I have learned into the technology and renewable energy fields. These sectors are not only at the forefront of innovation, but also important for advancing sustainability. So I'm eager to apply this knowledge in a real world setting, contributing to the growth and development of whether whichever organization I join. By using these financial tools, I hope to play a part in steering these sectors towards more innovative and sustainable practices. And thank you so much for your attention, and I look forward to any questions you might have about this concept and their application business world. Let's explore how we apply and what we learn to make a real impact. That's it. Thank you.